The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look here at the DAX like we usually do. As you can see, we had a little bit of a bounce this morning in the DAX, and then we sold off just a tiny little bit. So whether that means anything or not, who knows. Anyway, we want to get on to a couple of things that look very important. We've been talking about this Bitcoin for quite a while here. I wanted to bring you up to date with it here, folks. If you'll just give me a second here so we can take a look at it. This is interesting. Those of you that, I don't know if it's going to work or not. Well, it's already worked a little bit. If you look at Bitcoin here, take a look at this ABCD pattern that started back here in the middle of July. You'll notice that the ABCD structure finishes with a price. You'll notice on the upper left-hand corner there in blue it says 1618 at 6186.6. The high on Bitcoin on Sunday, excuse me, not Sunday, but Friday was that trades 24 hours a day too, so I don't know exactly when it hit, but that's when it hit. The exact high so far in Bitcoin has been 6189. And it backed off 500 points so far. We got down to 5,700 earlier this morning, and we're trading at around 5,800 in Bitcoin. So that's an interesting thing. There should be some support at those old highs at 5,000. That would be a 382 retracement in Bitcoin. But anyway, it's very interesting that it hit the exact 61% retracement. That's something that is, really important. Those of you folks that get my newsletter, I spend a great deal of time talking about the precious metals this week because, folks, these things look extremely bearish after you look at them a little closer. And when you compare it with the euro, what's going on with the euro, which also has some bearishness involved with it, it gives you a pretty good idea that there's maybe something's not nearly right here. If we'll take a look here at the correlation that we have between the euro and the gold, you notice over the past year it's been pretty good, probably in the order of about 85%, and this says that we're probably heading down. If you look at the price of some of the other precious metals like silver and platinum, you're looking at markets that really don't look very good at all on a technical basis. They just flat just don't quite have it. So just keep in mind that that's what it looks like. I don't know where the bottom's going to be, but it certainly doesn't look like it's going to be, happening here right now. But this is going to be interesting. The euro is backing off a little bit here this morning, much as we expected. We are coming down to some pretty important support here in the euro very, very shortly here, I believe, if I can just find the chart, and I know I have it here somewhere. Oh, by the way, let's just gold up to give you an idea of what we're looking at. In fact, we just hit it. Doggone it. We just hit this price in gold just a little while ago down there at this 1274 and change. So that's pretty much, see where we are trading right now, 1270. Yeah, we hit 1274. So that's very, very close. We might get a little bounce from that, but that's all it'll be, in my opinion. So just remember that that's what we're looking at here. We're going to talk just a little bit about the stock market now because I got 6 emails from people, and I think it's worth our time here to talk about it. Let's just get this up here and take a look at it. All right. Here's the Dow Jones Industrial Average on a daily chart going back to April. Or March. You'll see the ABCD patterns that are there. What I want to show you here, folks, is you'll notice these gaps that we've had in the Dow Jones Industrial Average. Do you see that? Those are very, very unusual to say the least. But if we take a look at them on a little bit, let's just, hold on, darn it, where did I put the darn thing? Hold on one second. Oh, shut the front door and raise the rent. Oh, darn it. Boy, I know I have it here because I spent so much time putting it together. Boy, I'm going to have to head off to that end of days nursing home again just to see what's going on. Shucks. All right, let's get this. Just go back to the regular daily one here. You don't see it nearly as clearly. I will post it after the break that we have here in a few minutes. But this Dow Jones has had, first of all, we're up 51 days of new highs. That's never happened in any. Well, that's broken such a big record. It's like DiMaggio's 56 game hitting streak. But you notice the two gaps that I have here. If we look at this on a little bit closer time frame, since August, there's been 6 gaps in the Dow Jones Industrial Average, and we know that these gaps will be filled. Just look at back in April, folks. Look at those big gaps that we had in April, and see how the market came down and filled both of those gaps. It's going to start filling these gaps. I mean, we're going to be looking at we're going to see the Dow Jones below 21,000 very, very shortly. It's just a matter of time. Now, people say, oh, well, it's certainly different this time. Yeah, it could be different this time, yes. And, maybe Dorothy will find her way back to the yellow brick road. But boys and girls, that's not something that you want to bet on. Let's go back in history. This is one of the big ones. This is a big market that we all know and love. And it's the crude oil market. If we go back into July of 2008, you'll notice this is when Goldman Sachs came out with their special report, crude oil $200 a barrel. And of course, you'll never guess what they were doing at that point. They were unloading, but you'll see the big ABCD pattern that we had. This is a weekly basis, and it doesn't have any gaps. So this is the same pattern, folks. These patterns, sure they fail, sometimes, but not when you're dealing with something as big and as important as the Dow Jones Industrial Average. We're seeing these all across the board. I don't know when the top is. I know it's going to be coming, but one thing I do know for sure, it's going to be really, really bad. It is going to be worse than 2008. I feel very, very strongly about that. That's what I look at anyway. We'll just keep a close eye on it. I'll post that Dow Jones chart when we get back from the break so you can see what I'm talking about, because it's a very interesting chart to look at with all the gaps that it has, and so we'll keep an eye on that. The other thing that's very surprising to me is that we've had a move of well over 1,500 points these last couple of weeks here in the Dow Jones Industrial Average, basically because of stocks, and the big stocks now are Boeing is the biggest, United Health, Goldman Sachs, Triple M, American Express, Home Depot, McDonald's, J&J, Chevron, Caterpillar, IBM, and Visa are the ones that are really the biggest of the 15 stocks that are making this Dow Jones move. That's 15 stocks, folks, out of 8,000. Hello, boys and girls. They're playing a game with you, in my opinion. The other thing that's happening is if you look at the Dow Jones E-mini, the one that's been going vertical, folks, open interest is dropping. 4 days last week, this market went up and open interest dropping. There's no new buyers. As Tom O'Brien said, they've opened the store, nobody showed up. It's just a matter of time before there's no more buyers, and then there's a vacuum under the market, and history tells us how that ends. It ends badly. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I'll tell you, 99.9% of my frustration in this business is related to these computers. I am just, I know the reason. Way back in the early 60s when I was graduating from pharmacy school, I was being interviewed for different type of jobs. I already accepted a job with Eli Lilly because that's who I wanted to work with. That was the premier company to work for at that time with all the that they had to put you through the MBA program. But I took an interview with IBM, and I took a whole bunch of tests with IBM, and I sat down with these three suits wearing their cordovan shoes and their blue ties and blue suits and stuff. You know, I didn't want any part of that culture, and of course IBM was a big thing at that time. They had something to do with computers, I think. Anyway, the guy said to me, he said, you did pretty good on your regular intelligence test. He says, but frankly, he said, on the test for what we look for, he said, you have the lowest score of any university we've seen. And I said, the lowest of any university? And he said, yes, sir. He said, any university. He said, evidently you don't assimilate well with these tests. And I said, well, I guess not. And so I didn't want the job anyway. But the fact that he told me that I was the worst of anybody, I mean, I guess that lodged into my brain, and I didn't do it. However, I did back in 1976 when I first went to work for Drexel. I had a Heathkit computer built by an engineer from TRW in California, so that I could calculate the fib numbers in silver and gold, and that worked okay. I was able to do that all right. Anyway, that's it. The fact is, I've tried to pull up this chart for the Dow Jones, and I pulled it up again. I can't even find it on my computer, and it was such a beautiful chart because it showed all 6 gaps going up starting in the middle of September, and they will start filling these gaps soon. It's just a matter of time, and I don't know the time. There's no question about that. All I know is it's coming. Get ready for it. You know, that's basically the bottom line. The other thing is, it's interesting, is the fact that, we got some of these things are still, acting relatively, poorly. Well, not poorly, but not nearly as good as other things. But the VIX index has, bounced up a little bit from these lows. And also, if you take a look at the Here's the, wait a minute. There it is. Hold on a second. There we go. By golly, maybe this guy at IBM was wrong. Shut the front door and raise the rent. That's okay. Here's this is some of the the ABCDs that I'm looking at. You see, we've exceeded everything. But what I want you to see here is September. Look at the gaps that are there, folks. We left a huge one around September the 6th. You'll see that was a big gap there. We left another gap on the 13th. And we left another one back on the 28th, and then we left another one in early October, and then recently we had this monster gap last week, and then again last Friday we left another one, and so these are going to be filled. So it's just a matter of time. What you want to look at is way over there on the left on June. You still got gaps way back there. So when we get the correction in the Dow Jones, it will be more than 15%, and it will be fast. That's it. We'll see what is going on to see what goes on with this. Anyway, that's my 2 cents worth. We'll see what's going on. We look at all these other patterns. You've already seen these. I don't want to go over them over and over again because it's just, wasting time. As far as the bond market, folks, we are at the very, very critical level in bonds. As we've said many times, we're down at this level of the 786 that we've tested now 3 times down there at that 71.28 level. Hold on one second here. We'll get this up here. 71.25 was the exact low. And you'll notice that we've held that so far. We're now trading around 52.03, but I believe we are going to be going lower. We'll break the 50.10 level, which will take out the May lows. That'll be over the last 6 months. Whether that has anything to do with who the Fed chairman is going to be or not, I really don't know. That's that's basically the bottom line. The other market that was very interesting last night, that was one of the reasons for the strength that we had. That's right, Mr. Z. Bitcoin, last on Bitcoin was 57.70. The high was 51.89 over the weekend. The reason why I know that is our good friend John Jameson from the UK came in and talked to us about that, and I posted that chart for Bitcoin already into the room, so you can see that the high was an exact 1.618 well, it wasn't exact. It was off by 2.5 points out of something that trades at 61.86.5 was the exact 1.618, and the 1.618 high was 1.689. We'll see what happens. Anyway, it will happen. It's just a question of, I like this quote about Ernest Hemingway. It says, "How did you go bankrupt?" And the guy said, 2 ways, gradually and then suddenly. And that I don't know if that's going to happen, but we are going to have one heck of a correction in here. Then maybe we go up to 26,000, 27,000. I don't think so, but that's neither here nor there. That's what we're watching as we go through here, looking at some of these things. Folks, those of you that follow the grain markets, pay particular attention to the soybean oil now, because there's been some news out this morning that is very bullish to soybean oil. This market has had let's just get this up here so you folks can take a quick look at it. We've had a situation here in soybean oil where it's been heading high, and we're going to be breaking above the 61% retracement today, and most probably heading up another couple of points here in the soybean oil. You'll notice that the low that we made back here on October that we pointed out in our letter was at the exact 61% retracement at that 32.30 level. It was a beautiful retracement that took almost a month to complete, and then it started back up again. We're having a question about the crude oil and heating oil. Folks, those markets are incredibly interesting right now. We'll just take a quick look here at the crude oil, because it had a bullish bias coming into this week. And of course, we're up a little bit Sunday night, as you can see, but we're going to have a little bit of trouble up here should we get to this $53 a barrel level. Now, if we bust through that and close strongly above it, then you're going to be looking at $55, $56 a barrel. But I think it's going to have a little bit of trouble there. You're going to have a double top from the September high, so you got to watch that 5,300 level very, very closely. That's one that looks extremely interesting from a longer-term perspective. We're going to take a little break here. By the way, I will not be here Wednesday, folks. I will be taking a travel day, and so you'll have to be on your own, which I know many of you will be happy to hear. And then others will say, oh, well, we miss you a little bit, but it doesn't make any difference. I will be back on Thursday and Friday. And Friday, I believe we're going to have Stan Harley as our guest from Harley Stock Market Cycles. And we're going to try to have on Thursday, we're going to try to have Bill Meridian from Cycles Research in Vienna, Austria. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, well, it happened again. I had to show you something, and by golly, the doggone computer just hid it from me one more time. Folks, I'm going to let you do this one yourself. If you want to see something that is really bearish, pull out a chart of platinum. I haven't got the chart here. I'll post it maybe after the break if I'm able to. I've tried to bring it up. I can't find it. But just look at this chart. It is just absolutely one of the most bearish charts you're going to see when you're looking at precious metals. It really is bearish. This last rally, when we had the huge move in gold and the big move in silver, platinum didn't even budge above the 382, not even 50 cents above it, and now it's breaking sharply. This is a really bad sign for platinum. Evidently, these electric cars will be coming, and I'll prove to be wrong again, because I was wrong about color TVs. I was wrong about microwave ovens, and it looks like my next car will be an electric one. Judge's ruling, not. I always want to hear what I'm driving. I'm not going to drive one of these cars that you can't hear, that's for sure. And let's take a look here at the gold market for just a second, because I want to give you an idea of what we're looking at on a little bit longer time frame. And also we need to look at the euro, because the correlation between the euro and the gold is extremely high, and we want to pay a little bit of attention to that. Here's the gold. We've gotten down to this level here in the gold. We've hit that level. An e-Corvette, yeah, can you believe that? Yeah, well, that not in my lifetime. By the way, if electric cars are going to be the thing, gas is going to be about 26 cents a gallon. So maybe the muscle cars, will come back. Who knows? I don't know. Anyway, let's just move on and try to talk about some of these other markets that you might have an interest in. All right, the biggest market of them all is the euro. Let's just look at it where we are here. We've had these really nice swings here in the euro that have just been absolutely spot on. And if you'll give me, oh dear. Oh, Larry, I'm going to have to hire somebody. You know what? I am having a guest coming in to see me from Copenhagen, one of our favorite folks who helps run my website. Fleming Danielson is going to come and spend, he's vacationing actually in Tucson at one of the resorts there, so he's going to come and work with me for a few days on technical things related to the computer. Hopefully he can show me how to use this keyboard, and so it'll be very interesting. Maybe he'll have some new ideas, to what's going on. All righty, so anyway, that's what we're looking at in the gold and the euro. You'll notice that the correlation between the gold and the euro is quite high. Gold has made its objective down here at 1273. The larger objective in the gold, folks, is a whole lot lower. Let's just take a look at it. You'll pull it up. You'll see, where we are here on the price of gold on a little bit longer term basis. Probably sometime, towards the end of the month here. Another 10 days, we might get down to this 1251 level. You notice that's the big ABCD from the high that we made in early September. We came down, we rallied up to the 382. You'll never guess how many that was. You're exactly right. That was a harmonic number. Then we came down, we made a 3 drive to a bottom at 1264. What do? We rallied $34, harmonic number. And now we're coming down, and the targets look to be around 1250 to 1251. I would say 1250 is what we'd look at. When you get to that point, you have to go and look at a larger time frame chart, because that 1250 is going to be important on a longer time frame, coming back to the lows that we made, earlier in the year, because then you'll be right at a really good spot, to take a look at it. Anyway, that's what we're watching here as we're seeing this unfold. Now, last night, I got to do a couple of things. Last night, I wanted to show you this, because this is really, it's interesting to me. It might not be interesting to you. Anyway, let's take a look here. I don't know why this does this to me. I'm going to have to figure out why this happens. Anyway, keep saying that, but I never do anything about it. All right, let's move on here. Here's the Japanese yen. Notice that I wrote there, this is something that I sent a special video out on last night. This was the what I was expecting to see, a third test of the 61% retracement, as you can see, during April, June, and now October, and it left a gap. And also, this was the reasoning the Abe was reelected in what was a false election because everybody knew he was going to be reelected. I don't even know why they actually did it, but they have their reasons, I guess. But anyway, we hit 114.10. That basically took out the high from June by about 3 pips, and then we backed off about 60 pips from that level. So if you happen to do that, just make sure that you put your stop at the break-even point, and you should be okay. Right now, we're trading at around 113.75, so it still has 35 points, profit in it. So anyway, the other one that looks really interesting, folks, is I know you probably think I'm on some type of medication, which I'm not, is the wheat market and also the corn market. Pay close attention to those. Let's just do the corn here for just a second here, because we're in the midst of harvest and we've had a bumper crop here in the corn. Let's just bring this up so you can take a look at it here in the corn. If you like patterns, if you don't like patterns, and you don't have to do anything with it, but you'll notice here that we have double ABCDs and a 3 drive to a bottom pattern occurring, and we also have a 1.27 expansion, and we're right over within a day or two of the new moon that we had on the 19th. So this should be close enough here where if we get down to this 338 level, we should get a pretty good rally of about 15 cents. So the risk here is about a nickel with about a 10 to 15 cent profit potential. But we are in the time frame for the seasonalities of a low coming in. As the highs come in July, the lows usually come in during the seasonal selling that is during the October-November period, so we'll be watching. Same thing is true of wheat. It's making the same type of pattern that you might want to watch. Now, I want to take, we got another break coming here. When I get back, I have something really important to you to talk about, because there's been a thing on the internet come out talking about these jaws of death pattern, and as bearish as I am, these patterns, 2 of the 3 that he shows are not correct. I will stand by that, but we'll watch this. The other one that looks up, we've had a question about Tesla. Let me get this up here. We'll show Tesla here for just a second, and then we'll be able to, just give me 1 second here to get Tesla up, and then we'll be able to take a quick look at it. You notice Tesla has rallied up to that 61% retracement. We got up to 362. We're trading a little bit below that right now. Has made a double top up there with that little butterfly pattern that happened. There's the large ABCDs that certainly have completed where we made the 382 back in February. So the stocks that are in the news a lot, Tesla, Amazon, Apple, and especially Apple and Amazon have very bearish pattern, folks. I don't know if it's going to mean anything from a long-term point of view, but boy, that Amazon chart is not a pretty chart when you look at it from a 3 drive pattern on long-term weeklies. It's just absolutely beautiful. We'll come back. We're going to take a look at this jaws of death pattern that was talked about on the internet this weekend. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Posted a chart here that was coming from a Dr. McHugh. He sent out a big email to I was sent to me by 3 folks here in the den, so I thought I ought to discuss it a little bit about this jaws of death pattern that he talks about. Folks, if you'll take a look closely at this chart that says jaws of death, and it shows the oscillator at the bottom where you have your stochastics running at about 179%. Anyway, if you'll look at the structure where it shows A, B, C, D, and then E up to the top, that I don't know if he can call that a jaws of death pattern, but it's basically a broadening top pattern, also known as the T6 or 5-point reverse wave. The problem is, for it to be really perfect, the C point should be touching that green line where the A is. That's what it looks like. Let me show you what it looks like if it were. This is from the same gentleman. Here he's got it drawn correctly. This is going back into 1998. You'll notice the ABCD pattern where E is where we topped in January the 14th of 2000. Remember now, the NASDAQ did make new highs into March 24th of that year. That's when we had the dot-com bubble. And, of course, that gave up better than 85%. Many of those stocks don't even exist anymore. So keep in mind that Dow went from 12,000 down to 74.6. So we'll see what is going to be happening. Then we'll see if that is going to be the case. Anyway, we'll just take a quick look here at the last one that he talked about, and that is the one from 1929. And I remember I was down on the floor of the New York Stock Exchange that day and talking to Jesse Livermore, and we'll bring this one up. And you'll see here is the same thing. I'll get it up here and you'll look at it. It is a broadening. This computer. I hate computers. I do not like computers, and computers do not like me. And that is the way it is, and that is the way it'll be. Here's 1929. He's calling this a broadening top pattern, and believe me, it is a broadening top pattern, but not the way he's got it drawn here. You need C. A is, so that's basically it. What's interesting is, if you'll notice that the 335 level in the Dow Jones, which was in August, the market gapped up and then ran from August all the way in to September the 3rd. It ran up for a solid month and topped on September the 3rd of 1929, and then it broke from 1929 from September the 3rd the actual bottom, the crash occurred on October 29th of 1929, but the bottom wasn't until November the 11th. You'll notice that where the black arrow is, that's when the real bottom occurred. And remember, after that, the market rallied from the 185 level. It rallied all the way back to the 2-something into early April, around the 1st of April of 1930. And from there, it dropped 90%. It had been a high of 383 on September the 3rd, 1929. The low was on January the 8th of 1932 when the Dow hit 41 and change. So I don't know if it's going to be that type of a scenario or not. All I know is this is going to be very, very nasty. That much I'm 100% sure of. Maybe in my lifetime, who knows? But keep an eye on it. It's going to be very interesting to see if these patterns that he talked about with these jaws of death, I just think they're drawn wrong. It makes a good story and everything, but we look at these patterns a little differently because we're putting in ratios, to try to see that the ratios match up, with the patterns, and that's what we're really trying to do. You'll notice here in the NASDAQ, we've done the same thing here with the NASDAQ, and it's been lagging the Dow Jones for quite some time, as the IWM is doing the same thing. But you'll see that we had that 3 drive to a top pattern there. We have the 1, 2, 3 drives. Now that's not an expanding or a broadening top of any stretch of the imagination. That is a 3 drive to a top pattern where drive 2 and drive 3 are higher than drive 1. The symmetry and those are very good. The ABC pattern is pretty much spot on. So those are the things that make it look pretty good. So anyway, we do have a symmetrical triangle in this one, but it is from the time of late August into where we are right now. You notice I have them marked there, 1, 2, 3, 4, and 5. That is a symmetrical triangle. Gartley described that in his book. He described all these when he says T1, 2, T through 12, T6, which happens to be the symmetrical triangle, the broadening top pattern. He describes it exactly. That's why when I looked at the Gartley pattern, back in the early 70s, he spent 2 full pages just talking about the Gartley pattern. That's all he talked about. Well, he didn't call it the Gartley pattern. It was on page 222, and I wrote my first article about the Gartley pattern in 1975, I believe, for Futures Magazine. Yeah, it was Futures Magazine that is now Stocks and Commodities, and I described it. I think 2 people contacted me about it. We didn't have email or anything like that, and that was basically it. But he spent 2 full pages. Nowhere in that book of 560 pages did he take 2 pages to describe anything, but he did that on the Gartley pattern. And basically what he said is when you have a bull market, look for the first ABCD correction to buy it and buy all the ABCD corrections. And that's the best way to handle bull market. And in the bear market, you could do the same thing. So we'll watch those as we proceed through the rest of the day here. We'll check to see what the markets are doing. We're selling off just a tiny bit in the NASDAQ. Let's see, nothing else is really going on very much. The gold bounced a little bit off the 1273 level, but not too much, and we'll see how some of these other things line up as we go through the day here. The end's not doing much. The bonds have just made a little mini ABCD pattern here at the 152.14. I don't think it's going to get much above that level. That's just my 2 cents worth because they look really bearish. But we could get a rally because we've been down here. How many days have we been down now in bonds? We've been down 2 weeks, so we could easily get a rally back in bonds that would take it back to a minimum 382, and that would take you up around 223. That's about 9 pips from where we are right now, and we could get as high as the 153.08 level, but if we get above 154, which is 2 handles from where we are now, which would take something pretty dramatic, I would think, then you could make a larger ABC taking you up to 156. But I don't see that happening. All I see right on the cards right now is it's going to have a difficult time at this 382 at 152.22 is what it looks like from my perspective. Whether that means a whole lot or not, we'll have to just wait and see if that's going to be the case. Okay, now the next one we want to look at, of course, we got a break coming up here. When we get back, we'll talk a little bit more about the crude oil market, because we've had a couple questions about it, and we'll see if we can answer some of these questions. Okay, well, I haven't heard the music yet, so I guess I should keep talking. Don't have anything else to say till the break about heating oil. I'll post the heating oil, and we'll talk about that in just a moment.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart of the long-term weekly chart of crude oil. And as you can see here, we are looking at a market that has a potential to make a head and shoulders pattern. That's why I was referring to that $53 a barrel level as being so very, very important. If you'll also look at the time frame, remember this is a weekly chart, so it's long-term. But if you'll look at the low that we made back in May, that would put an ABCD structure up there about the same time too, and it's pretty much the same price, so it's very interesting to watch that move as what it's going here. So thank you very much, Dollar Bill. I really appreciate that. That's very nice. Anyway, watch this crude oil when we get to this 53. We could get as high as 54.50, but I don't believe so. But that's just my 2 cents worth. Anyway, this is what I'm looking at on a longer-term basis on the crude oil. We're seeing the same thing in the heating oil, so it's all very, very interesting as we come together. But it's going to be a fun time no matter what. Remember this stuff when we're trading here at $52 back in 2008 when Goldman Sachs was recommending it to go to $200 a barrel. We were trading at $144, and God, I remember that trade because I sold 153.50. When it got to 151.50, I said, I think I better book a little bit of this, and I ended up booking it all. I made some on the way down. I mean, I did okay on the way down, but boy, I really messed that one up. But you shake it off, you move on, and that's basically what you're looking at. I really wanted to show you that platinum chart, folks, and the doggone thing has disappeared. I will get that platinum chart tomorrow. I want to show you that. Those of you that get the newsletter, of course, have it in there. Oh, wait a minute. No, I don't have it in that one. Shut the front door. Anyway, we'll show that platinum tomorrow. So live every day in an attitude of gratitude, and may God bless.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.